Guys, John Paulamy here, Actionable Intelligence. Today is Saturday, April 5th. This is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you personal financial advice. I'm just a guy on the internet that talks about investing and finance. Please do your own due diligence. It's your money. It's your responsibility. Okay, so obviously, this week's video is going to be focused particularly on the day of liberation, if you want to call it that, the tariff announcement, the dislocation in the markets, and uh, kind of going back to focusing on what people that are instituting this policy in the administration have said in the past about what the actual plan is. One of the things that I found a little bit disconcerting was when this happened, I was listening to various Twitter or X spaces with a lot of the financial people, a lot of the pointy shoes, a lot of the people that you would recognize as thought leaders in finance. Most of these people are people that have benefited from the current system that has been in place for decades. And so consequently, they're very upset with what's happening. In particular, the fact that the stock market is down massively over the last few days. They don't like that. They want the stock market to go up. If you're running money, if you have assets under management, you're paid for returns. And if things go negative, then you could have money pulled out of your fund, your assets under management go down, and then your management talks about reducing your bonus and your job. And so they're upset. But this thing, I think, is bigger, and we're going to get into that, than just a wild man on X spewing out tweets and out of control. That's how some people have characterized this. Look, there's a big situation in this country around our debt, around our economic policy, about wealth inequality, about how a large proportion of the population has been left behind while a few at the top have benefited. And that is going to be rectified or attempted to be rectified. Now, I'm going to get into the policy prescriptions that have been articulated by the president and his staff during the election and prior to the election. These people were elected. And so what I would ask you to do is there's going to be some homework assignments. There's going to be some reading. There's going to be a couple of video to watch, and you should watch this. And then you can come to your own conclusions as to whether or not you think that this policy is reasonable and has a chance at success. I have been talking about this for several months. I talked about it, what I characterize it as the something similar to what the Reagan administration did when it came in after the disastrous Carter administration. Of course, it was a different scenario. They raised rates to crush inflation. They deregulated. They did a lot of other things. And then they had the morning in America, the economy recovered. Now, you can agree as to whether supply side economics was a good thing or a bad thing, but the economy did recover. So much so, in fact, that Reagan won a landslide re-election in 1984. And so what I am calling what the Trump administration is doing, I've dubbed it the Reagan-Volcker gambit. Now, they're not going to raise rates to crush inflation. They're going to deal with fiscal policy because fiscal policy, government spending is what's been driving the economy and driving the inflation coming out of the COVID pandemic. And the fact that the government has become, and this economy has become addicted to government spending, overspending, to the point where we're in peril as a country. Now, you can disagree with that. You can agree with it. But what I think you should do is at least, if you haven't taken the time to at least attempt to understand what the actual policies are, you should do that because they're going to implement them. And then you can at least have a reference point to think as to whether it's achievable or not, instead of just listening to the media, people on the other side of the political aisle, which are going to be against everything, no matter what. Now, again, I want to caveat this for the midwits because I was on Capital Cosm yesterday, Danny's show, and it's funny. I look in the comments, and a lot of people thought it was a positive interview, but there's always these people that say, this is just another political uh, propping up of this administration. I'm telling you right now, I don't know if I'm going to tell you about the policies that they're articulating. That doesn't mean I endorse the policies. That doesn't mean I think the policies are going to work. I'm just telling you what they're going to do. This is the thing that people don't understand. They allow their mind to get clouded with these things. Our job again here is to make money, to invest in the markets, to get a return that exceeds what we could get in the S&P low fee index fund, being an active investor. In order to do that, okay, we have to have some reference points of what's going on in the world. Okay. Doesn't mean I endorse the policy, doesn't mean I like the policy, doesn't mean I think the policy will work or won't work. This is what's going to happen whether you like it or not. So you should at least understand it. And so there'll still be people that come and say, they don't listen. They already have it in their head. And when you're talking, they just absorb what they want to hear. So please go listen and read. And it's not easy reading. It's not fun to read the policy paper that I'm going to reference. It's not, you have to probably listen to the Tucker Scott Bissonette interview a couple times in certain areas to pick up on what they're saying, what he's saying. Okay. It might take that. But you shouldn't just run on what you think is going on. I listen to these Twitter spaces, the stock market's going down, so all the money managers and all the point issues are upset. This is Smoot Howley. We're going to have a worldwide depression. I mean, well, that's possible, I guess. Anything's possible. Do I think that's the likely outcome? No. So I'm going to explain what I think is happening based on what they have said and what they're trying to achieve. Then you can make your own decision from that. The one thing I wanted to point out from an investing perspective, this is something that I bring up every time we have one of these market patterns. It's a snippet from the poem If by Rudyard Kipling. And for those on the podcast, listening on the podcast and can't see the slide, I'll read this out to you. If you can keep your head when all about you are losing theirs, if you can wait and not be tired by waiting, if you can think and not make thoughts your aim, if you can trust yourself when all men doubt you, yours is the earth and everything that's in it. And so this applies to investing. This market drop, this pullback in prices, we've seen in the past. We've had these things happen before. They can be very lucrative opportunities. Okay. And so again, I don't know policies that the Trump administration isn't going to implement is going to work. I also don't know if we're going to have a trade war that's going to plunge the world into a depression. It's unknowable. Those are probably outlier events. There'll probably be some successes and some failures, and there'll probably also be, some countries that cooperate and some that don't. We'll just have to see how it plays out. Okay. But the intent isn't just a wild man on tweeting things. There is method to the madness. And I think that if you can keep your head, if you have powder dry, if you have been listening to this channel for a while, you knew that the markets were overvalued. We've talked about it. And so when we have these market dislocations and we have a panic, which is what we have, everything gets thrown out. I was asked the other day, somebody asked me yesterday, well, you've been talking about gold and gold stocks and everything's down. Yes, when you have a market dislocation in the stock market and the stock market goes down, 95% of the stocks go down, even gold stocks, even undervalued stocks. They get more undervalued. That's your opportunity. You are seeing the future 10 baggers being created right in front of your eyes because this too will pass, as did the GFC, as did the tech wreck, as did these other dislocations in the market that I've experienced over my career. One way or another, they pass. And bargains are created. Okay. So I'm not saying run out on Monday and buy, but what I am saying is if you have that mindset, if you can keep your head, if you don't panic, if you understand the history, if you understand that the ascent of man is a chart from the lower left on the chart to the upper right, that there's blips along the way, that those create opportunity. So let's get into this and go forward. So this is a chart showing the average effective tariff rate in the US is now at the highest level since 1909. Okay. I just want to point that out. It's had this 1 day thing. It just got sprung out. It was a little bit more, I think, than most people were anticipating. That's why it's kind of a shock and awe. I've told you before that this is going to be a shock and awe blitzkrieg situation with this administration. They don't have much time to implement this. They've got to shock and awe. They got to go hard coming out of the gate because they have a congressional election in 2 years. And you have a very militant Democratic Party that is very likely, based on history, to have a majority in the Congress in 2026. And so if there's going to be pain, if there's going to be a dislocation, if there's going to be a stock market drop, we need it early. And that is in the Reagan-Volcker gambit that they'll be able to see, people will be able to see the successes starting to the green shoots, the fruition of this policies coming into effect. And so, because in the end, everybody votes with their wallet. Yes, there's fringe groups that vote, but they're a small portion of the population. Most people vote their wallet. And so this is the starting point. They told you they were going to do this. Now, I think people were shocked that it was as broad and affected as many countries, but this is what they got to do. And what's interesting is we've already seen countries coming to the table. So it's kind of a prisoner's dilemma. The people that come back first, basically what they don't tell you in the media is a lot of countries around the world, most countries around the world have a lot of tariffs protect their industries so that we're not able to export to those countries without paying high tariffs. The United States is the largest consumer market in the world. Okay. It's a 70 to 80% based consumer market. It's multi-trillion dollars. It's a lucrative market. Everybody wants to export here. Okay. And so what we're saying is, if the post World War II order, the United States lowered tariffs to help countries build up their economies after the war. And this continued. They've used the WTO and things like that to encourage countries to industrialize, to encourage countries to grow, and to be able to export to our market. But what's happened over the decades is this has morphed in from a development type situation into people taking advantage. And Trump has been talking about that for 40 years. You can go back and look at interviews he gave to Barbara, uh, what's her name on ABC News? She's dead now. Barbara Walters, Oprah Winfrey, where he talked about when he was a young man talking about how the country was being ripped off. He's had that mindset his whole life. The country's being ripped off, paying for all this stuff. We lower tariffs, countries export here, we can't export to them. So he was already primed for that. So he has surrounded himself with technocrats that have a similar view. That's the first thing you need to understand. He just didn't think this up recently. He thought you can look at the interviews from when he was in the 80s, even in the 90s, that if he ever ran for president, he's tired of the country being ripped off. He's used that language for his entire career. And so now, they had 4 years to come up with a policy that they were going to implement, and they're implementing it now. They told you they were going to do this. I've told people in videos what was going to happen because I actually read and studied what they were saying and what they said they were going to do. They're doing it now. And a lot of people are shocked because the status quo is being upset. People don't like change. And certainly people don't like to see their brokerage accounts going down, especially the pointy shoes that have benefited from the ripping off of the American people and the evisceration of this country in the middle class and the working classes. Yeah, that's a little bit of a, you know, that's not a Republican or Democratic talking point. That's John's talking point, and many other people like myself that are aggravated. We'll get into that later. So this is just a chart showing, get off Twitter, grab it. You can see the declines. They're pretty massive. We're basically in a bear market in tech. I told you that these companies were overvalued. They were already starting to roll over, going back to the DeepSeek announcement several weeks ago, where the deep, and putting that AI was the new shiny object, right? That's what Wall Street likes to do, guys. They like to sell you a narrative, sell you a story of why the stock market, why these tech stocks, why their favorite stocks need to keep going up. It's the next big thing. It's always the next big thing. You can go back and read during the Depression in 1929, going into that. It was, radio, RCA stock. Go look at it. It was the Nifty 50 stocks in the 70s, the conglomerates, right? That was the new shiny object. Then we had the communications, telecom, internet bubble. That was the shiny object. Then housing was the shiny object. And now AI. Okay. And these things always get bubblicious, get overvalued, and rolled over. So it was primed for this. These stocks were primed for this anyways. And they're still, even with these declines, extremely overvalued relative to history. So let's talk about this is part of the homework assignment. This is an actual policy paper written by one of the people. I think his name's Stephen Marin. He was at the Manhattan Institute. He worked in previous administrations. Um, and what this is a reference point that if you read it, you'll kind of understand what this administration is trying to achieve, what the people that are behind the scenes, policymakers, they have a president that already has a basic view that the country's being ripped off and that something needs to change. And then this policy uh, cohort people under him, and now you need to understand what the policies are. So this is just short snippets. I don't have time to get into a big lecture. You should read this, 40 pages. I'll put a link to it in the show notes. It's called A User's Guide. This is the actual name of it. User's Guide to Restructuring the Global Trading System. This is part of the executive summary. The desire to reform the global trading system and put American industry on fair ground vis-a-vis the rest of the world has been a consistent theme for President Trump for decades. We mentioned that. We may be on the cusp of generational change in the international trade and financial systems. The root of the economic imbalances lies in persistent dollar overvaluation that prevents the balancing of international trade. And this overvaluation is driven by inelastic demand for reserve assets. As global GDP grows, it becomes increasingly burdensome for the United States to finance the provision of reserve assets and the defense umbrella, as the manufacturing and tradable sectors bear the brunt of the costs. Tariffs provide revenue and, if offset by currency adjustments, present minimal inflationary or otherwise adverse side effects consistent with the experience in 2018 to 2019 during the previous Trump administration. While currency offset can inhibit adjustments to trade flows, it suggests that tariffs are ultimately financed by the tariffed nation, whose real purchasing power and wealth decline, and that the revenue raised improves burden sharing for reserve asset provision. Tariffs will likely be implemented in a manner deeply intertwined with national security concerns, and I discuss a variety of possible implementation schemes. I also discuss optimal tariff rates in the context of the rest of the U.S. taxation system. So again, I encourage you to take the time to read this paper. It's 40 pages, 40 some odd pages. You have to take breaks and come back and read it over and over in some areas. It's kind of complicated, a little complicated. But in order to understand what the administration's doing, this is what you need to understand. So, for ease of understanding, this is the policy that has been articulated. It's called the Trump 333 plan. We've talked about this before. I'm going to review. Now, I ran this through Grok. This is from Grok. It did a good synopsis. Okay. So the Trump 333 plan is kind of based on what Prime Minister Abe did in Japan when they had the three arrows policy. That's why you'll hear me refer to the three arrows policy, because you have to keep this simple for people, right? Political reasons. You can't come here and just sit and give, 8-hour lectures about trade and tariff policy and put formulas up on a chalkboard. People's eyes glaze over. You have to have simple um, explanations that get the gist of the program so that people can absorb it. And then you have to repeat it over and over. And so the three arrows strategy, the 3-3-3 plan, it's easy for people to understand. And it's something that people can track in their mind, the average voter, and that which you want to manage has to be measured. And so politics is politics. And so if people can attach, this is what the policy prescription is, this is what they're articulating, I can measure it. I have a measuring stick for this in my head, i.e. gas prices, grocery prices, interest rates, mortgage rates, so I can buy a house. Okay. Then I can determine, that's how you have to keep it simple. This is a basic understanding of propaganda. And yes, all politicians are involved in propaganda to a certain extent. Maybe that's a crude term to use. I think they would describe it differently. That's what it is. Doesn't necessarily mean that propaganda is a lie. It could be truthful too. You should study what some famous propagandists have said about propaganda. I'm not going to get into it. It's beyond the scope here, but you need to understand the psychology of crowds to a certain extent and how propaganda works. You have to have simple explanations for simple people. That's not talking down to people. It's like people just aren't engaged enough, give these huge, complex explanations. So here's the 3-3-3 plan. Economic growth of 3%. The first arrow targets an annual GDP growth rate of 3%. This is intended to jumpstart the U.S. economy, which Bessent and Trump argue has been hampered by inflation and lackluster output. The approach involves stimulating economic activity through tax cuts, deregulation, particularly in banking and energy sectors, and trade policies to encourage domestic production. This echoes Trump's broader campaign promises to, quote, supercharge the economy, unquote, though it faces challenges from factors like tariff-induced price increases and global economic interdependence. So that's the first arrow. Cut regulation, okay, kind of intertwined a little bit is interest rates, which we'll talk about. Get energy prices down, okay, because energy is an input into everything, okay, and get this economy growing again, okay, and deregulating the economy. That's what they're doing, okay. This is exactly what Reagan and his administration did to a large extent, because we were coming out of a couple decades of stagnation and status policies. And so there was massive deregulation during the Reagan administration. Now, I haven't done enough research to see, the media, people have focused mostly on the cuts in government and the Doge cuts and all that, but I haven't really researched, and I will for subsequent presentations, how much deregulation is actually happening, because it's very important now, especially like in the energy sector, to help get energy prices down. Okay, let's continue. The second arrow is budget deficit reduction to 3% of GDP. The second arrow focuses on fiscal discipline, aiming to cut the federal budget deficit to 3% of gross domestic product. This reflects a response to the ballooning deficits inherited from prior administrations, exacerbated by Biden-era spending on pandemic relief and industrial policies. For example, a $1.8 trillion deficit in 2024, which was over 6% of GDP. Again, those are wartime levels of deficit spending, guys. Bessent's plan suggests offsetting tax cuts with tariff revenues and spending reductions, though critics note that achieving this without slashing major programs like Social Security or Medicare, which are politically sensitive areas Trump has vowed to protect, may be difficult. Again, this is really threading the needle. The difference between Reagan Volcker And what's Trump Bessent is the current administration has a lot less room to maneuver because of the constraints around the deficits, because of these entitlement programs and things like that. So that's another one of the arrows. That's why you see the Doge guys in there just cutting left and right. And that's, again, people's boxes are being gored. That's why you're seeing so much, you know, arm waving and hair on fire. Okay. But it has to happen. Okay. We cannot continue. When I hear somebody stand up and say, we can't do this, we can't do that, when, these people have their rallies, then what is your plan? Because we cannot continue doing what we're doing. Okay, we will have an economic crisis. The dollar will get eviscerated, and everybody you'll be living in Argentina. Okay, and it will not be pleasant for anybody. In those places, when you have these economic dislocations because you run these policies of spending more money than you take in consistently, you reach a tipping point, and then who really is affected the worst? The elderly on fixed incomes, children, everybody's affected. It's hard to have economic growth. It's hard to plan when you have high, massive inflation, which you would end up having. And so when these people say something, if you're of that persuasion that you think there isn't a problem, then explain to me why it's appropriate to run budget deficits of 6%, and how long can you do that? Anybody here can go that's listening to this can go to the St. Louis Fed website. It's called Fred. They have all the economic data. You can put in there budget deficit. You can put any economic indicator. They track everything. You can custom build things. They have all the data for the economy in there. You can go look for the history of the United States back to at least the 30s, at least. I've done it. What is the historic budget deficits as a percentage of GDP? And the only time you've had budget deficits like we have now as a percentage of GDP is during wartime. You cannot say the economy's you cannot continue doing that indefinitely. So you have to ask yourself, okay, just like you have to do in your real life, you have to have priorities. There are trade-offs. Okay. Yes, I believe that Social Security and Medicare are going to have to be dealt with. There's going to be means testing. There's going to be higher retirement ages. There's going to be raising the threshold for Social Security taxes on income. Right now, it gets cut off like at 150,000 or something like that. It's going to have to be expanded. That's just going to have to happen. The defense budget has to be cut massively, probably by 80 or 90%. And these are a lot of oxes to gore. It's not going to be politically possible. But if you don't do it, you're heading to ruination. Energy production increases by 3 million barrels per day. The third arrow seeks to boost U.S. energy output by 3 million barrels of oil per day. Now, this is the important part, or equivalent in other fuels. That's what you need to focus on, because they're not going to raise oil production by 3 million barrels a day. It's not possible, especially in this price environment, and the fact that it's very possible that U.S. shale production is plateauing. But we've talked about that before. But focus on barrels of oil equivalent. That's what they're going to sell to you. That's what they're going to do. Raise overall energy production 3 million barrels a day equivalent. This aligns with Trump's unleash energy production rhetoric, emphasizing deregulation of the fossil fuel industry, rolling back climate-focused restrictions, and leveraging America's natural resources to reduce energy costs and enhance economic competitiveness. Bessent ties this to his experience with Abenomics. Remember, going back to Abenomics, if you want to know, study what the Japanese did under Abenomics. That's something similar to what we're doing, where bold resource mobilization was key, though its contrast with global shifts towards renewables. So that's why you're seeing the push on nuclear. I mean, Chris Wright, who's the energy secretary, he used to run a fracking company. He knows you can't raise production 3 million barrels a day of oil. So, but they have to keep it simple, right? It's like I was telling Danny yesterday on Capital Cosm. Okay, if gasoline and diesel prices go down and you're at the pump, the average person, what's the constituency of the Trump administration? lower middle class, working class, middle class people, tradespeople, people in the trades, and small business owners. Okay, not the pointy shoes, not Wall Street. Okay, Trump and Bessent have come out recently and said they don't care about the stock market. It's not their priority, which is a contrast for Trump from its first administration when that's all he talked about was the stock market. So they're all in on this strategy. And so again, they've only been in there since January, okay, 21st or whatever. And so they're pushing these policies hard, and we're just going to have to see if it all comes together. There's a lot of plates in the air, okay? But you have to understand what they're doing. It's not there is a plan. You may not like the plan, you may not agree with the plan, but there is a plan. And so from that, we can understand what they're trying to do. Now, one of the things that I thought is tremendous, and I wrote about it in this month's issue of the Actionable Intelligence Alert newsletter, was the fact that recently President Trump signed an executive order where he declared certain critical minerals and things like that as national security. He invoked some legislation or invoked policies where, we have tremendous resources here in the United States, in the continental United States, which have not been allowed to be utilized or exploited because of political and court cases and environmentalist small groups of people who have stymied using big money the development of resources we have in the U.S. And so Trump has invoked a national security situation to help get around some of that. One of the things I did, and you can read about it in the April issue if you're a subscriber, if you choose to subscribe, is I did a deep AI research project. I had OpenAI do a deep research project on the mineral endowment of just the United States and how huge it actually is. I was shocked. So I just did the non-energy portion. It broke it up into non-energy and then energy resources and then overall. And so just, and it gives you sources. This doesn't just pull like magazine articles, the USGS and all these different things. It took the thing about 40 minutes to run the thing on the research project. So, anyways, in summary, I mean, you're looking at $6 to $10 trillion in mineral wealth just here in the U.S. in non-energy. You throw energy in there, it starts getting into the trillions and trillions and trillions of dollars. Now, that doesn't mean they're going to just throw the gates wide open and go nuts, but this could be another arrow, if you will, if we develop this. There's so many large projects that have been stymied because of not being able to get permits. If we and court cases, it's on federal land, and one administration says you can go there, then another, it takes time. You can't just turn a mine on in 12 months. So they have to have a policy that allows them to do it, right? And then be consistent. This policy could also lower our trade deficits, create revenue for the government, and create a whole bunch of jobs in mining and resource extraction. I mean, you see what's happened here in Texas during the shale booms, okay? The amount of wealth that's being created, the amount of high-paying jobs, the spillover into support industries and all this stuff. It goes without saying. It's just stupid and uh, lazy not to utilize the resources that the United States has in its own borders. And it can be done in an environmental sensitive way. You just don't go in there and robber baron the thing, but just saying we're not going to do any development, that's just dumb in the context of what we're doing here. And so that's another thing that I think that arrow, if you will, that they're going to exploit. And it's trillions and trillions of dollars worth of wealth in the ground. The United States is a big country. It doesn't even count Canada. That's why, people think that President Trump is, this is why you look at it, and I call it the Don Road doctrine, where there's a focus on the Western Hemisphere, why Trump uses these very provocative, he likes to troll. There's a means to the madness of Canada, okay? Canada's going to come around because The problem that people don't understand about tariffs is that these countries are going to line up because they have to, because we don't have the trade deficit. We have the deficit. They're they're exporting more to us than they're importing. They're going to end up being the loser on the deal. Now, if they're going to talk a lot of rhetoric, and there's a lot of chest pumping and people's egos and pride get involved. But in the end, if you choose not to deal, then your country, if you were exporting, is going to suffer. Taking Jim Beam off the liquor store cabinets in Canada was already bought. That's not where the money is, okay? And so I would suggest to you, you've already seen countries come to the table. Argentina, Thailand, there's a whole list. You can have AI tell you. You can keep track of this. And the prisoner's dilemma, game theory says that the first people that come are going to get the better deals. The longer you wait, the worse deal you're probably going to get. The whole purpose of the tariffs, okay, is not to finance the entire government. Yes, there'll be revenue coming in from the tariffs, okay, but it's if you read the policy papers, the intent is severalfold. Bring manufacturing back to the U.S. Now, there's people arguing that that can't happen. Well, I agree that's going to be difficult in a lot of industries because of the evisceration of our industry over the last 3 or 4 decades, going back to NAFTA and all these other ridiculous trade deals where these uh, captured politicians sold out the people for money, for 30 pieces of silver, by cutting these trade deals that eviscerated our middle class and our manufacturing capability. No, we're not going to manufacture T-shirts in Ohio, but there are things that we can manufacture, and there are things that other countries are tariffing us that we can't. And so we're going to have fair tariffs. People are going to negotiate, or guess it's possible that all these countries won't negotiate, and we'll have a global, it will be like the Depression, and we'll have, global trade wars, and there will be countries that choose not to. China can choose to escalate this. This is just going to give advantage to places like Vietnam, Malaysia. If they cut deals, then the manufacturing will come from there, and they'll spool up. And so it's not all downside. Initially, it is because there's a lot of uncertainty. No one knows what's going to happen, and people immediately gravitate to worst case scenario. Things are never as good as they seem, and they're never as bad as they seem. So here's the summary. This framework draws parallels to Japan's three arrows: monetary easing, fiscal stimulus, and structural reform, but adapts it to Trump's America First agenda, emphasizing tariffs, energy dominance, and fiscal recalibration over monetary policy shifts. Bessent has framed it as a scorecard for Trump's economic success, though its feasibility depends on variables like congressional cooperation, global trade reactions, i.e., retaliatory tariffs, and oil market dynamics. Economic analysts note that while the goals are ambitious, they face significant hurdles, including potential inflation from tariffs and the complexity of reshoring manufacturing in a globally integrated economy. Yes, fully agree. It's not going to be, it's not something that's just be like, well, this is really easy. It's going to be hard. It's going to be bumpy. It's going to be volatile. But this is what they're going to do. We've already seen a reaction, and I'm not saying it's a reaction to the policy, but just hammering the stock market like it did. What happened? What has happened since January? Well, the 10-year Treasury rate, okay, ever since the stock market started to weaken, and people started getting worried about, you know, a recession. Remember the Atlanta Fed? We were talking about that in the last several weeks. Atlanta Fed coming out before this even announcement was talking about the potential for uh, slower growth in the U.S. We've seen the 10-year rate come down from about 4.8% to about 4%. As a matter of fact, it traded down on a three handle, I think, yesterday or the day before. And so we've seen rates come down from 4.8 to 4. That's one of the things that they are doing. Remember, the thing that no one's talking about, that I keep reminding people about, is that the United States has to roll. The United States has $36.6 trillion in debt and increasing, and they have to roll 8 to 9 trillion of that this year. And because the previous administration was irresponsible and was refinancing the debt at short-term rates, which were low, now this administration has to term out the debt. What does term out the debt mean? It means it has to sell out further on the curve, 5, 10, 20-year bonds, okay? And so getting rates down allows them to sell the bonds at a lower rate, saving on the interest cost. That's another thing we've talked about on this channel for over a year, is how interest expense is now is the third largest expense for the Treasury, is interest on the debt, exceeding the defense budget. So these are some of the metrics we're going to have to look at. And so this is part of the policy. What's another effect of the 10-year coming down? Well, the other effect is that a lot of other rates in the economy are keyed off those rates, i.e. mortgage rates, automobile loans, credit cards, you see? And so if they can get, this is part and parcel of what they're trying to do. If you can lower the deficit, if you can cut out spending, if you can identify waste, fraud, and abuse and purge it from the government, okay, that brings your deficit down. Okay, that allows rates to come down. You're not having to sell as many bonds. Okay, it starts calming down and having a calming effect on the market that, maybe there are some adults in charge now and that we're not going to have to, demand higher interest rates as an investor because this country, the new United States, is not fiscally responsible. And so that's all of this is happening concurrently together. And so if rates are coming down, okay, that's a that is another impetus into the economy. That gives I'm going to show another chart here where right now you have the 2-year rate is well below the Fed's funds rate. You have an inverted yield curve right now. The Fed needs to cut rates. And, Jerome Powell and Trump are not friends. And so there's pressure on the Fed rates. But they're scared because the uncertainty in the tariffs not going to be inflationary. If we cut rates, well, we have to raise them again soon because of an inflationary spurt. So there's a lot of things going on. The other thing that's going on is look at what's happened in the oil market. It's not a result of drill, baby, drill, but you slam the stock market, people get scared, people start extrapolating this down stock market and uncertainty and a tariff trade war, global depression, global economic weakness, energy prices go down. That's going to translate into another tax cut, if you will, for consumers. It had nothing to do with drill, baby, drill. But if people, again, we go back to the politics of this. We already seen that egg prices are down massively. Okay. Remember that? Bird flu and the Biden administration liquidated a lot, millions and millions of laying hens. Well, that's reversed. And this is the things around the propaganda and the selling of this, of the metrics that they're going to focus on. If rates are down, if gas prices are down, you're staying there at the pump. Wow, gas prices are coming down. And then you associate what's been drilled into your head over and over and over, drill, baby, drill. Now, the people listening to this are more sophisticated, but the average working schlub out there, hey, the president said drill, baby, drill was the policy. Prices are down. I guess the president knows what he's doing. Wow. I'm not saying, yes, that's how a lot of people think, unfortunately. Okay. People that are on listening to this this show are a lot more sophisticated than that. I get it. I'm just explaining to you how you have to measure what you want to manage, and keeping it simple is how you do it. And if you could show these results, so had nothing to do with increasing drilling or energy production. It had to do with prices are dropping. Not only that, but also the Saudis have come back and said that they're going to increase production to retaliate against some OPEC cheaters like Iraq and Kazakhstan. That didn't help things. Maybe that was planned. Maybe that was a deal also that we don't know about that the Saudis use as an excuse to kind of juice things. Who knows? But I can tell you one thing that's not happening. There's not going to be very little drilling going on at $60 a barrel oil in the Permian, okay, or in the US. We've already seen that. We've already talked about that. Okay, so that could be a problem down the line. That's another reason why I'm bullish on oil. But let's get back to this. So this is Scott Bessent from last year when he was at the Manhattan Institute. Here's a quote from him. We're also, this is bigger than just tariffs, okay? This is the whole global monetary system, okay, which is we're heading for a reset. But let's listen to what Scott Bessent, Treasury Secretary, said last year. We're also at a unique moment geopolitically. And I could see in the next few years that we are going to have some kind of a grand global economic reordering, something on the equivalent of a new Bretton Woods, or if you want to go back, like something back to the steel agreements or the Treaty of Versailles. There's a very good chance that we are going to have that over the next 4 years, and I'd like to be part of it. You should listen to the Tucker interview of Scott Bissonnette, which I will put a link to in the show notes, where he describes himself as a gold bug. Or he said that when he was in private managing money privately, when he was a money manager, and he was in finance, that he had a large holding in gold, and that many people would have described him as a gold bug. This is important. So here's the interview, Treasury Secretary. You should watch this. It's an hour long. I'll put a link to it in the show notes. Tucker interviews the Treasury Secretary. They get into a lot of this discussion about what they're doing, how they're trying to do it, what they're trying to achieve. You should watch it instead of just assuming that listening to CNN or a Twitter space with people that are having an ox gourd are upset because the stock market went down and giving you these wild statements. Again, I'm not endorsing the policy. I'm agnostic. It is what it is. It doesn't matter what I think or what you think about it. This is what they're going to do. Is it achievable? What can we look at to measure to see if it's actually working? And how will it affect investments? That's what the importance of understanding it for us is. So Jim Bianco put this chart on X, and I like it because he had a pretty good on this stuff. And he's somebody I follow on X. And he's put this here. We can't go back to what we were doing before. We were on an unsustainable track. Here is World War II. When we blew the debt out for the war, basically from here to here, we went to 106% of GDP. The debt did. We're at levels approaching that. We can't continue just running deficits 6% of GDP every year, where we have debt increasing faster than the GDP of the country. We're going to enter into emerging market territory, and you should understand that that's not a situation that most people are going to find very pleasant. Hyperinflation, economic stagnation, no upward mobility. Think Brazil, think Argentina, think third world. Can't continue to do what we were doing before. And so when somebody on the other side of the aisle or somebody who doesn't like what this administration is doing, what is your policy prescription then? Because we cannot continue to run the debt up like we're doing. And somebody is going to have to deal with these entitlements and this defense spending. They have to be dealt with. That's where the big money is. Now I'm hopeful that Elon Musk and his Doge guys can find that there's hundreds of billions of dollars in waste, fraud, and abuse in Social Security and Medicare, and they can root that out. And people that are getting it continue to get their services uninterrupted at the levels that they're getting it, and that will solve the problem. But it probably won't. But we'll have to see. Again, we're at the beginning stages of this. So I like this. This is a guy, quote the Raven. He writes about economic things. I think the guy used to be a bartender. He's got a bunch of tats and everything, but he's kind of an everyman guy. But he writes about finance and things like that and investing. And he quoted a lot around. And I like this statement that he made, and I like the fact, I agree with this to a certain extent. And this was on X. So I wanted to read this and discuss this a little bit. It's talking about this whole tariff thing. I look at it this way. For the last 45 years, the battle between labor and capital has been overwhelming in capital's favor. Look at the nosebleed levels of markets, price of real estate, gutting of the middle class. Heck, I've been lucky enough to benefit from a lot of it. Take a drive through any Midwestern state, and you can look at all the abandoned towns that once offered opportunities for people to work, raise families, have purpose in life. These towns now have nothing to offer other than a part-time position in a Dollar General. Gutted towns like these are all across America. Their populations relying on some government subsistence while they deal with the alcoholism and drug abuse that is rampant. So along comes a billionaire president that I'm told is just out for his billionaire friends, but seems to want to change that metric. He wants to try to bring manufacturing back. He seems willing to do something that will not be politically favorable to him for the long-term betterment of our country and its citizens. But wait, I can't have this. Look, my totally inflated, pumped up stock portfolio just blipped down. How will I be able to buy one of those cheap plastic Chinese vacuums that I need to replace every 18 months if we put tariffs on imports? No, the plan is no good. Let's go back to more of the same. And so this is exactly what I've been discussing. And a lot of people on here, a lot of people that listen, they agree. There's people here that don't agree because they're benefiting. People on the coast, people in the government sector, people in finance that have benefited from the status quo. And so now their ox is getting gored. And so again, we can't continue the way we were continuing. We can't continue with the wealth inequality. We can't, this is what deportations do. People are against deportations. If you get, it's supply and demand that you folks that went to college understand how a supply and demand curve. If the supply of labor is brought down, especially cheap under market labor from these countries, then the labor that's here, the price will go up, wages will go up. Yes, that means business margins will contract. That's what he's talking about here. Battle between labor and capital. Capital has benefited for 4 generations since the morning in America under Reagan, the deregulation and things like that. Yes, so if you're in corporate America, if you're in the U.S. Chamber of Commerce lobbying groups, if you're in the status quo political class, the so-called establishment, the so-called pointy shoes, you've benefited. So of course, you don't want to have your ox gored. You don't want to share the wealth, but we can't continue on the way we are. And so that's what we're at. You can agree with it or disagree with it, but that's the path we're on. Do I think it'll work? I don't know at this point. I can't render an opinion. But I have seen the deprivations. I have seen the drug and alcohol abuse. I have seen the evisceration of the entire center of this country, small town America. And what I think was an important statement here that he said was what I focused on. We have 340 million people in this country. We cannot run this country for the benefit of the top 1%, 3 million people. We have to put policies in effect where everybody can benefit. No one's begrudging a business owner, or no one's begrudging people to make money in the markets. No one's begrudging that. But we don't have, when is enough enough? It kind of goes back to that movie Wall Street when Bud Fox tells Gordon Gekko, how many yachts do you need to water ski behind? And this statement is what I like to hear. Take a drive through any Midwestern state and you can look at the all but abandoned towns that once offered opportunities for people to work, raise families. And the key statement here, guys, have purpose in life. People, human beings have to have a purpose in life. And we've taken that away. Do I think this will bring it back? I don't know, but we have to do something. We were on an unsustainable path and we were coming to a path that was eventually going to lead to collapse, in my view. So we'll continue on with the slide presentation. So yields are coming down. I talked about it. That's, maybe an unintended consequence. The market has these huge dislocations. A lot of the money has to go somewhere. People consider treasuries to be risk-free assets, so they park their money there. But if you buy bonds, remember, price of a bond is inversely proportional to the interest rate. So if more people are buying bonds, it forces the price of the bond up, rates come down. And so that's what we're seeing, right? 2 year is well below the Fed funds rate. So you see the gold price here, but in yellow, uh, it's going reacting very nicely. But also you see the Fed funds rate here in white. This is what the Federal Reserve, it's basically trying to keep it between 4.25 and 4.5%. I think it's at 4.33, something like that. New York Fed trading desk does that by trading government securities. I'm not going to get into that. But you look at the market rate, the 2 year index, it's at 3.5%. So you have an inverted yield curve. You have rates need to be cut. The market's telling you that, you know, rates should be cut because the economy is weakening. Okay. And they need to be cut basically a lot. And so this is untenable. You see over time how basically this is what Milton Friedman argued for, that's that the um, 2 years should just be the gauge. But anyways, that's another discussion, a philosophical policy discussion that's irrelevant right now. But you see that 2 year is telling you that the economy is weakening, okay, and that the Fed needs to cut rates. That would be positive. That's part of what they're trying to achieve. If they can get rates down, remember, a lot of these rates affect mortgage rates, car loan rates, credit card rates. You know, people will be able to refinance, things like that, okay? Interest burden comes down on the debt. This is all positive. This is part of the three arrow policy. So we'll see what happens there. This is a metric we should be watching. Energy prices coming down. U.S. natural gas prices fell by 6% on Friday morning amid the overall panic market selling, but the benchmark Henry Hub price was declining less than the WTI crude price, which sank more than 8% to hit a low of $61 a barrel. It's very important to watch what's going to be happening in the shale basins. Remember, they decline very rapidly, and I don't think there's going to be a lot of activity at $60 a barrel. I saw somebody on Twitter say that they were an Eagle Ford operator with about 4,000 barrels a day, and they've just basically canceled their drilling program for the rest of the year. And so that means you're just blowing down existing production. And again, we know how fast production in these shale basins come down. So it's going to be very interesting to watch what happens. Tariff announcement from the U.S. on Wednesday afternoon rekindled concerns about the global economy, and all markets tanked on Thursday. The main indexes on Wall Street crashed and registered the worst one-day drop since 2020. The S&P 500 index slipped into correction, falling by more than 10% from its February all-time high, as the prospect of a global trade war terrified many investors that a recession could be in the cards. Very possible that we were going to have a recession. We may have already been in a recession, although a mild one. Same thing that happened during the Morning in America Reagan Volcker situation. We had a pretty deep recession and then came out of it fairly quickly once rates started coming down. If you go back and look at the data from 1980 forward. So again, this is another reason why a lot of people don't want the government to cut spending, okay? Because corporate America benefited from the deficit spending. I'll put this up on the Facebook, uh, you know, if in case you didn't know, we have the Actionable Intelligence Alert Facebook group where I put a lot of these charts and different videos and things up on there so you can look at them. Because, once I take the presentation down, the charts disappear, and some people want to go back and look at them at their leisure and study them. And so I'll put this up there. But this shows you, this is from John Hussman, another person I follow on Twitter. He's kind of a perpetual bear, but he does have some good points. And there's talking about corporate free cash flow in blue, profits in excess of net investment, and this is the deficit. So you see how as the deficits were increasing, corporate profits ballooned. And so that's another reason people don't want spending cut, right? I mean, people give money to politicians. You have to understand how our system works. I was actually talking to some people this week, and I don't think they really understand how this system works. People give money to politicians, and the politicians implement policies for the people that give them the most money. This is typically how things work. It's not Mr. Smith goes to Washington. It's naive. So, wanted to talk about gold producers. None of the senior gold companies are trading at a premium versus the versus gold bullion. One of the things that a lot of these stocks got thrown out with, the baby gets thrown out with the bathwater during a market dislocation. So even though gold's still above $3,000 an ounce, now you have energy prices coming down in the short term. Maybe they'll go up over the long term. We'll see. But one of the main inputs into gold mining or any mining is energy. In particular, in many cases, diesel, because all the heavy machinery runs on diesel. And so if energy prices are coming down, that means even more margin expansion because your costs are going down as your energy cost goes down. And so we were just starting to see the beginning of the gold stock starting to get traction relative to the gold price because they had severely underperformed the gold price. And so I think this is where another one of your opportunities is going to be, because I think gold's going to continue to rally as we get into this monetary reset over the next few years, which Mr. Bessent is talking about, and also what's happening around the world. So I think that this is an opportunity because these gold stocks really haven't, they were just starting to move higher, but there's a big gap between um, the cash flows and the potential that they have. Again, there's still that mindset out there that people are buying the dip. I think that I also saw on X this week, retail investors were buying the dip this last week. They think, until that gets expunged, exercised from the mentality of investors that they throw the towel in, that we probably have some more to go on the downside because people have been conditioned as Pavlov's dog, you buy the dip. Stocks always go up. The same stocks go up. And I've argued that we are in a rotation now out of tech, out of the favorites overvalued sector into the undervalued sectors. That takes time, takes a long time. Purge the former mentality. I've been through this before. And so you either accept that that's happening or you think, well, this is just a dip in the long-term upcycle in tech. So that's what people are doing. They're buying because they've been conditioned to do that and it's worked in the past. They have recency bias. So um, this is an opportunity in my book. I'll put this chart up on the Facebook page. Uh, we're trying to grow that too and be helpful in any way we can to provide. That's free, by the way. And also, if just as an aside, we even get into more in-depth discussions on the Discord channel, but the Discord channel is only available to paid subscribers of the Actionable Intelligence Alert newsletter, and we'll have long form discussions about things like this and a lot of good ideas. So, anyways, just wanted to point that out. So this was before the obviously what happened. This was chart as of 4/3 from Crescat Capital. Gold miners versus S&P 500 year-to-date performance. You see that the gold miners were outperforming. That's going to continue, I think, going forward, unless we have, if we have a deflationary depression or a deflationary period of time, we could see gold and commodities pull back. But I think, you know, as I said to during another interview, I think in the end, this all leads to more money printing around the world. I mean, I saw another chart this week. Global the world is in $300 trillion in debt. The Western countries are, for example, the euro, okay, the European countries, the EU, they're talking about having a $900 billion spending on defense, rearming. I don't know how everybody feels in Europe about Germany rearming for the third time in 120 years, but that's another discussion. But in infrastructure spending. But the problem is they don't have the money. So where are they going to get the money? Well, they're going to print it. Where are they going to get the money for all these old people, even in the U.S., to pay all? They're going to have to print it. And so we'll see. That's another reason why I think, And then again, one of my main thesis is, maybe they can pull a rabbit out of the hat with their policies, but I still maintain until I see things change. The United States is, an empire in decline. It's kind of pulling back to the Western Hemisphere, the Donroe Doctrine. That's what part of that discussion is about Canada. I talked about, how much the resource base is in the United States. It's similar to Canada. I probably need to run a deep research on that, on Canada's resource, Greenland. Okay, that's why the president's talking about these things. He's talking about a Western Hemisphere Donroe doctrine that gives you access to the Arctic. That's going to be a big thing over the next 10, 20 years. Who can dominate the Arctic? Okay, there's a tremendous amount of resources there, fisheries, oil and gas, minerals. Okay, and so South America, there's a lot, instead of trying to police the world, then, kind of pulling back and having a controlled demolition and dominating the Western Hemisphere and creating a block here that is virtually self-sufficient, okay, as this multipolarity increases around the world. Okay, guys, that's it for this week. I threw a lot at you this week. Uh, I'll put the show notes in the show notes, the links for the Tucker interview of Scott Bessent, the blueprint paper for what this administration's doing. I suggest you take a look at it. Again, just because I'm talking about it doesn't mean I endorse it or think it'll work, but I do think we need to understand what's going on because this is the people that are in power right now, and these are the policies they're pursuing. And then from that, understanding that, then you can have a more coherent and reasoned view on what investments could benefit or not benefit. So that's the intent. Okay. I know there's going to be at least one comment in there, this pro-Trump guy, quit talking about politics, all this stuff. This is very important stuff. Okay. This is going to affect your investments. So just having this view, this naive view that you should only talk about investments. Well, okay, sluggo. I mean, this is what's dominating investing right now. That tariff announcement last week caused the markets to basically crash, a mini crash. So you have to think about it, okay? But in the end, I always have the view, like I said at the beginning, you have to keep your head. This too will pass one way or another. Wars eventually end, depressions, all these things eventually pass. And so what I want you to focus on and what I'm focusing on is let's understand what's going on and let's look for things that can benefit because again, many potential 10 baggers are being created right now by these pullbacks in prices. Everything's being thrown out the window, the baby with the bathwater. These are times when you have tremendous opportunity presented to you. And it's very hard emotionally to overcome your self-preservation instinct when everybody else is selling and everybody's screaming about a depression and everybody's going, nutso with all kinds of wild statements to say, you know what, this is an opportunity that this particular business, again, looking at the companies as businesses, is this business going to benefit? Is it going to be affected? You know, I'll give you an example. I have a company in my personal portfolio. I may add it to the dividend portfolio. I don't know. It's a company called First Pacific. Okay, it trades in Hong Kong. I think it trades for around a PE of 4. It's a conglomerate. What does it do? It owns one of the largest noodle companies in Indonesia. Okay, it owns toll roads and telecommunication properties in the Philippines. It owns power plants in in the Philippines. Okay, are people in Indonesia going to stop eating these noodles that Indo Foods makes if if the if the Trump institutes tariffs? I don't think so. And so if the price gets knocked down, it was already cheap and it was paying a tremendous dividend and the earnings are growing, that's a business you want to own. That's an opportunity. That's an example of what I'm talking about. Okay. It doesn't matter for the price of noodles in Indonesia, what's going on with tariffs, it doesn't matter. Okay. People have to eat. And the thing was already cheap, and now it's presented to you as even cheaper. That's just one example. There's many. All right, guys, that's it for this week. I appreciate the support. I appreciate the sticking with me here. Um, this too will pass, and we'll get through this, and we'll find more opportunity and move forward. Thanks, and have the good rest of your weekend. Talk to you next week.